Today I'll be showing you guys an extremely easy option strategy that you can set up on a stock that you think is going to drop. So this example I'll be showing you guys on Microsoft. And so we'll come over here and we'll click on Trade Microsoft Options. Actually, we'll go back to Microsoft so I can show you guys the what we might be looking for during with recent price movement. So let's say that we were looking at this and we saw that this dip right here happened, and then we looked at the past month, we saw that it dipped a little bit and then it started to rise back up. Let's say we think that another dip is coming. Let's say we heard recent news, we think a dip is coming. So we think that Microsoft is going to drop, but with this strategy, if Microsoft happens to continue rising, we can still make money. Worst case scenario is Microsoft just stays flat, which is what we don't want. So you want to do this with a pretty volatile stock that you think is going to drop. Before we get into this though, make sure that you are aware with all the risks associated with options trading, such as assignment and things of that nature. But assignment can happen when you sell pieces of an option strategy, but with this one, all we're doing is we're buying different pieces. So this option strategy specifically does not deal with assignments, so we don't have to worry about that on this one. But if you're doing a different strategy that involves selling, then you want to be aware of that and how to prevent that. And also learn how to cancel an option strategy or go out of it whenever you may need to, because maybe you want to drop out of the option strategy sooner than the expiration date. So for this example, like I said, we'll be over here with Microsoft. And so this is called a strip strategy. So all we're going to do is it involves buying 3 pieces. We buy 1 call and we buy 2 puts. So the first step is you want to go closest to the share price, and you want to buy the strike price that is closest to the current share price. So for that will be 267.5 because it's only 10 cents off. So we will buy a call right here. And then the second step is when we're going to buy a put. So we'll switch this to put, and we're going to buy that put at the exact same spot. So you'll see something like this, and it should say long straddle at the top. Now it says long straddle because we are only able to buy 1 put. We want to switch this to buying 2. So we're going to click this arrow right here, click on custom, and we'll find the one that says put, and we're going to switch this to 2. So now you'll see something of this nature, and you're going to see right there our max loss is about $1,138. And it's going to cost us about $1,170 to get into this, because this number right here is multiplied by 100, because one contract controls 100 shares. So that's how you can see, because this total cost will be multiplied by 100, so $1,170 to set this up. But you can start to see if Microsoft continues to rise, which on this number is pretty unrealistic considering the expiration date that we chose so far is on July 15th, which is only about 4 or 5 days away from when I'm recording this. So you're going to see that the rising part is probably not going to happen. What we're looking for is, best case scenario is it starts to drop a little bit. Let's say that Microsoft drops about $10 because of the news that we heard. So we're right here, $257.74, about $10 less. We're going to be up $813 if you watch this number right here. So we're up about $800, $700, $800. And so that's when the expiration date is about 5 days away. So if we switch this, let's give it some more time to move so that Microsoft can drop even more. First step again, buy a call closest to the share price, which is right here. And so what's going to happen is this is going to be a little bit more expensive, but it's going to pay out better because it has more time for the stock to drop and will profit more. Next step is buy a put right there. Click this arrow again, click on custom, and change the puts from 1 to 2. So now we have the same thing. Now your max loss is about $1,670. Your total cost to get this into place is $1,730, so about $500-600 more. But now you can see we have a lot more time for Microsoft to start to drop. So because of that time, if Microsoft hits 257, it's now only $384 profit as opposed to, what was it, like $800 last time, but it has much more time to drop, like I said. So now Microsoft can drop a whole $15. Let's say it falls to 252. Now we're up $1,300. So you can see kind of how that can play around with things and how that changes things. So we'll come over here to option strat so that we can visualize this a little bit better. So come over to optionstrat.com, click on build, come to this bottom right portion where it says other, and we're going to click on strip. And the reason we're going to option strat is because right here you can see you just can't visualize that much. All we're seeing is the prices on the expiration date. But let's say we wanted to get out of this trade on July 20th instead of the expiration date, which is July 22nd, we don't know what profits are going to be, and all that we could do is just wait until we could see it in the moment. But on option strat, it'll tell us exactly what our profits will be days out from now. So we come over here, and we're basically just going to copy this over. So first thing we're going to do is put in our ticker symbol, which is Microsoft, and then all we're going to do next is make sure that we chose the correct expiration date, which is to July 22nd. And now all we're going to do is we're going to copy down this right here using these movements right there. And so actually just by default, this is 267.5. By default, they're already right there, and I think that's just because it's closest to the share price, so it's just going to default these right here. So we're actually already set up, and we can come down here and move around this chart range so that we can see, like I said, you can see if it goes up or down, you can make profits as long as it doesn't stay stagnant. But we're going to move this a little bit so we can see just exactly what we needed to look at. And so like I was telling you, you can see the exact times of the days of the week. Wherever the share price of Microsoft is at, we can see the profits that we'll be making or the loss that we'll be making. And you can also play around with the implied volatility and see how that affects things, but for right now we'll just reset it to what it's at. And so like I said, let's say Microsoft falls to 253, which is just about a $14 loss, so it falls to 253 on expiration date. We're at $1,229. Let's say it falls to 258 at 2 p.m. on Friday the 15th. We're going to be up $559, and so you could just opt in to just close the option then and decide from there. But that's pretty much the basis of this strip strategy. If you have any questions, be sure to comment them down below. And if you're interested in other option strategies, be sure to check out my channel for more videos just like this one. And yeah, thank you for watching.